I'm at the Innovators Network in Johannesburg, Melrose Arch. We're at the end of the day, and I'm lucky enough to speak to Rupert Nicolay, the lead for Financial Services Africa. Rupert, thank you very much, first of all, for Microsoft sponsoring this event, for your time to do presentations, to arrive here, etc. And then finally to have a chat with me after the event.
Yeah, awesome event. Thanks, Tony. Really enjoyed the conversation this morning. So, yeah.
Yeah, it was actually great. I loved the interaction at the tables and so on. That actually worked out pretty well. There was sort of a theme that came through in all the presentations, basically in terms of it being a holistic process and having to think the strategy around the business as a whole, etc. Now, if we look at financial services, especially insurance businesses notoriously are quite fragmented, very siloed. The processes, the technology, everything, all of those sort of things. When you're looking at implementing a technology strategy, and more particularly a AI strategy, where should companies be focusing on first for their spending to get this process to kick it off?
Yeah, so I think what we're seeing is you can be successful by running a multi-speed type of program. So there's quite a lot that can be achieved in the sort of short to medium term, which can help you demonstrating value from what's there. And the kind of things that are appropriate to have in your short to medium term strategy, things like process automation, perhaps extending out to new forms of customer engagement, but fairly cautiously, kind of light personalization and so forth. The medium to longer term, you need to be thinking about right now as well, because it's going to have an impact on how you build products. It's also going to have an impact on how you potentially engage the regulator about your intentions. And those types of things take a long time in the insurance market. So you actually want to be thinking about that right now as well as you plan out your strategy. So what does a product look like in 2, 3, 4, 5 years' time? How does it meet customer expectations at that point in time? What does it dial back in terms of what you're going to do and what you're going to ask for permission to do if you need to? And then how you're potentially going to organize across your business, because as you say, many are running in siloed function. The last thing I say is, the things to retain at the group level as opposed to out into your distribution or other business units are really around a kind of very lightweight group governance on top of use cases, technology platform access and approvals, some commercial level of functionality, and then group client information, which can benefit from being shared across the different business units. Those are kind of table stakes to think about keeping in your central function from a planning perspective and an execution perspective.
And as we stand now with the technologies available, the AI available, and companies' capacities, etc., where do you see current sort of the best value being taken out of AI implementations in insurance?
Yeah, so I think first of all, on the basic process automation side, claims and onboarding would be the two areas that our customers have implemented, a lot in the space already. So significant successes. Then in the contact center, sometimes connected to those processes, the basics of summarizing and establishing customer intent, triaging requests that are coming through the contact center. Those have definitely been kind of ripe areas to get to get early successes. And most have got production early successes now running in that space. They're now moving on to kind of some other areas. In particular, we talked this morning around the advisory force and how can we bring the kind of human and AI experiences perhaps like more cleverly together. And really what they're thinking about there is not just about cost and accuracy in that business, but they're also thinking about, can we expand the number of people that our advisors can deal with, and thereby increase our addressable market for the same cost to serve. So if you can do that, then you can flip it into becoming like a revenue equation. And then they are thinking a little bit further ahead in terms of the the changes that are coming with the way their customers think about sourcing information, making decisions, and so forth. So we talked this morning once again, Insurify app and the hoopla around that landing in ChatGPT in the last couple of weeks. It's there, but I don't think our customers are right there yet. That's quite ambitious. but there is interest in that. And the one of the big ticket items is, what kind of memory do consumer AI channels have about your customers, and how does that compare to the understanding that you have of those customers? What does that mean for how you engage them in the future? But we're definitely out of POC and pilot mode when it comes to insurance and AI at the moment. When it comes to those kind of core processes, and both automation and checking of the processes are areas that have delivered value already.
You spent quite a bit of time talking a little bit about the advisor environment, the agent environment, AI agents, etc., the sort of enabling advisors with AI tools, etc. Based on that, maybe I know we haven't got the time now to go into the specifics of that, but how positive would you say you are about the future of face-to-face insurance distribution and advice versus sort of purely direct digital type of advice processes?
Yeah, so I think it's interesting. We had that topic as a question at our table for discussion this morning, quite well represented with some with local insurers with very varied distribution models. Conclusion at our table was that the intermediated advice was here for quite some time to come, and so it's not a question of everything's moved digital. In fact, if anything, the insurers in the local market are somewhat cautious about pure digital investments. And so, if you can really bring greater automation to the advisor and the intermediary and what they do day to day, then perhaps that's a middle ground which allows you to support those people, but it also allows you to apply some of that automation if you find that some customers are choosing digital more frequently in the future. So, the worst can happen, you can maybe double the productivity of your advisors and intermediaries. And the best that can happen is you might end up with tools that both are useful to them, but they're also useful to you as the insurer when it comes to delivering a direct value proposition. But we kind of talk about, Microsoft's really around productivity at its heart as a company. And we talked about productivity for advisors this morning. And there are lots of opportunities to really kind of knock 10, 20, 30% of effort off an advisor's cycle of seeing customers, filling in, completing onboarding tasks, and so forth, and potentially making their interactions way more personalized and designed in such a way they recognize the history of that relationship with that customer. And all of that leads to greater conversions and so forth. So all of that's revenue upside. It's not just taking cost out by boosting productivity. It's potentially revenue opportunity. So we kind of see like a symbiotic relationship there. Maybe there's a little bit of hedging of bets, but for now, if you can empower those advisors, then you're onto the right track, I think. And there are quite a number of ways that we discussed this morning to actually to tackle that.
Yeah. So, I mean, that says that people should be watching those videos afterwards to get the full story. Yeah. Maybe in closing, then just asking, most businesses use sort of a classic business school approach to strategy. There's sort of a process that you go through to design the business strategy, people that you involve in that. Do you think that the current way in which companies do business strategy and strategize for the future of the company is still relevant in the current environment where things change so fast, and especially when it comes to technology, where your thinking of 6 months ago needs to be radically adjusted because of latest technology that a competitor might have implemented, etc.?
Yeah, so I think, particularly in the insurance industry, if you speak to senior execs and actuaries and so forth in the insurance industry, they tend to be somewhat kind of blasé about technology is going to change everything. Well, we've heard it before, and our insurance organizations a big machine. It's like a ship, and to change the direction, we had an analogy again. We have to make like tiny course corrections and get there over time. And the typical reasons for that are the amount of time it takes to execute on a typical project. Just bringing in new insurance admin platform, saying, hey, it's measured in years. I mean, in the insurance industry, number one. And number two, of course, it's regulated. So the next thing is to say, well, the regulation, restricts us in that way. I do think from the execution perspective, we are going to see material shifts in the next, 12 to 18 months. Just the time taken to kind of prototype and develop underlying systems and software is falling quite substantially. And so that's having an impact on the ability to actually execute. And others are recognizing, so if you don't go and take that opportunity, then you have the potential for falling behind. At the same time, regulators are actually quite on top of the evolution of AI. And we had a quick summary of the regulatory landscape this morning. So they're not quite as slow and kind of lumbering as we might think. And there are many cases, I think, where what's coming is empowering to your average customer in the market. And regulators typically have that as their North Star. What is it that treats the customer fairly? What's empowering to kind of my customer base in market? Cheap payments, well-structured insurance products that don't overcharge them and they don't buy the wrong products and so forth. So if that's the North Star, then the regulator might move a little faster. So I think we have to shift, like I think, from a strategy perspective. 3 to 5 years in insurance wasn't such a long time 10 years ago. Now I think, it's a 12 to 18 month kind of time horizon that one has to think about. Certainly in the short-term business, maybe a little less so in the life business, but short-term, of course, intensely competitive. So, you've got to think about that. And I do think many industries will be impacted. I just think the insurance industry's got like a little bit of a tendency to think, we're the slowest to move and we've got our time. And I'm not sure they have that degree of time. Particularly if you have like new entrants like we do in the local market coming in, can they get there much faster than you've been able to and kind of land something at a lower cost? It's a real possibility. Yeah.
Yeah, very interesting. In fact, lots of opportunities for insurers, but also lots of challenges in terms of changing mindset, changing business culture, all of those things. Rupert, thank you so much. It was great chatting to you. And once again, thank you very much for your support of this event.
Awesome. Thanks to be here with you, Tony, again. It's the second time we've done it, I think. It's been a great success each time. Thank you. Yeah.
Thank you. Brilliant.